Hey, everybody. Welcome to the Energy News Beat Daily Stand Up. My name's Stu Turley, President and CEO of the Sandstone Group. This is our weekly recap. And I'll tell you what, it's kind of fun. Today is October 14th. Hope you're having a fabulous weekend. Our hearts and prayers are going out to the folks over in the Middle East and in Israel for the conflict. Hope everybody stays safe. For this week, it has been a crazy week. We've had so much news going across the news desk, not just the geopolitical things, but there's a couple things. There are three critical things to take a look at the price for energy, oil, and gas. First thing, if Israel does retaliate against Iran and they take out their oil exports, price is going to shoot through the roof. So Iran had gone to about 3 million barrels per day exporting. China and India had been buying all they could get their hands on, and that was giving $70 billion to Iran through all of their cash. That has been in conjunction on where that had gone. The next one that could possibly happen is if, so that is Israel taking out Iran's export. The second one is if Iran mines the Strait of Hormuz. If that happens, we've seen the price go up in oil and exports and cripple exports. The third item that is up right now in the air is the fact that the Mediterranean, the Leviathan field is right now, they are evacuating oil platforms off of the Strait of, or excuse me, off of the Mediterranean. Michael and I have talked about this for years. It is actually the Club Med, as he and I talked about, one of the biggest oil and gas, or excuse me, biggest gas fields. 20% of Egypt's natural gas is now being looked at being warned on shut off. That's going to affect a lot of people in Egypt. Egypt has a real dilemma going on. If they open their border, they're going to just open up the Gaza Strip for every all, just to say they're going to lose their Palestine potential under the UN Security Council that had been going on. If they leave it closed, there is a potential for more deaths on the Egyptian border. The second order and third order of magnitude of all of this going on right now is the U.S. oil and gas shale is becoming more and more important. When we take a look at the important articles in Michael assessment of the Exxon petroleum acquisition or merger with Sheffield's company, Pioneer Resources, all EMP operators, all oil and gas employees, all Americans are going to be more dependent for internal energy security. The third order of magnitude is our administration better get their act together on U.S. energy policies. Last one coming around the corner is China. Um, who knows what they're going to do, but I've heard rumblings that if they did ever say now's the time to do it, now's the time to do it. Hey, on energynewsbeat.com, subscribe, like, share with your dogs, share with your family. There's a couple of stories out there that are pretty telling of what's going on. Clean nuclear power. The North Carolina legislature says yes with veto override. So North Carolina is now saying they are all in on nuclear. Pretty important. Taking a look at Katanga's last jaguar and pumas, the wind farms are their newest threat there. That is huge because the energy hypocrisy of the wind farms and the amount of death and slaughtering is sad. How do we protect animals against wind? How do we justify the lack of environmental caring on the green energy side? I'm a humanitarian and a ecological fan. Where's the outcry? And so when you take a look at India's diesel exports in Europe to soar to record high, that article's got a lot to it because it is all intertwined. And this is why we have really changed from just an oil and gas focused to energy focused. We all need to elevate humanity out of energy poverty around the world. Hope you have a fantastic weekend. Pray, hug your family members, and keep an eye out. Thanks, and have a great day. Talk to you all soon. Okay. It is a horrific thing, and our hearts and prayers go out to everybody.
Yes.
But Michael, with us and taking a look at the energy news beat, this is also about geopolitical and energy. And so when we have to understand the attack happened on an anniversary 60 years ago, the Yom Kippur War of 1973, October 6th to October 25th. Here's the key. I got this graphic in there, and this is off of Twitter. Crude, Michael, went from $5 to $50. Wow. I went to Oklahoma State, but what percentage is that? A bunch. Interest rates from 6.5 to 18%.
Oh, that makes me shiver.
Gold 42.22 to 875. Stocks lost almost 50% the following 52 weeks, but ended about even after 7 years. So this was the Yom Kippur War, and Yom Kippur is a really big day for the Jewish faith. And so when you go in, take a look at the other things in here. There are several bullet points that I just want to cover these as we outline them out. The crisis is not a repeat. All of the Arab countries joined in against Israel. This is now not that. Egypt, Jordan, Syria, Saudi Arabia, and the rest of the Arab world all pigpiled in on Israel. This is Palestine, and this is Iran. And so when you sit back and take a look at Iran, what just happened, Michael? The Biden administration just freed up $6 billion. There is a correlation there. The oil market itself doesn't have any of the pre-October 1973. Oil demand was surging. The world had all of its spare capacity just wiped out. Now we have OPEC, and we have Russia, and we have OPEC Plus balancing out production versus demand. And so, Michael, you and I have been beating our heads up against the wall trying to figure out supply and demand rules have been thrown out. And so this is not the same. And I think the author has a very good point that number two, the oil market is not the same. However, they are not, you take a look at this, aren't trying to boost prices beyond a few extra dollars. OPEC and OPEC Plus and the Saudi leaders have said they want it at that 100 mark. They don't want to go below that because their profits are coming up big. So,
this plays into the idea of, having as much spare capacity. I think what's interesting is this. And so the article that you bring up here mentions that this terrorist attack that's going on right now in Israel it's from Hamas, but it's really led behind the scenes by Iran. And part of this has been a result of the fact that we've been allowing Iran to bypass, quote unquote, export oil bans. And we've been sort of turning a blind eye to this. So one thing I find interesting is that in response to this attack, we might now enforce actually start enforcing these sanctions, it remains to be seen, but they might doing this. That alone might push oil prices above $100.
I don't think we will.
Okay.
I'm going to take the advocate side of the Biden administration that the Biden administration does not understand where the next bag of depends is going to come from. They have weaponized the dollar and they have no way to enforce it. So I truly don't think they're going to enforce anything on Iran.
So I love Javier Blas. I've read a few books by him. He's a great reporter from Bloomberg.
Yes.
The number 8 point in this article
is key.
I disagree with, though.
Why?
I do not believe we have enough oil in the Strategic Petroleum Reserve to deal with another crisis. That was basically his other non-comparison to 1973, was that we have an SPR to work with. We've got a little bit of it. We don't have much. He goes, although it's at its lowest levels in 40 years.
I was going to say.
Big if. It's a big although. Although he's dead, he could maybe help us out in the future.
Javier's a rock star. And I mean, he is absolutely very, very knowledgeable. But we are in a geopolitical nightmare.
Nobody bats 100%. In baseball, you bat 300%, you bat 33% of the time. You're in the Hall of Fame.
That's right. Now, you take a look at who's going to benefit out of the Middle East war. It's going to be Russia. Russia and Iran are going to Iran's got some cash flow that they've unbelievable cash flow now. You're going to see that come in, but you're also going to see the oil from Russia. They're going to sell everything they possibly can. So the winners out of the war is Iran and Russia.
So before we move on
an energy side, I got to clarify that the energy winners.
I want to bring it back to the beginning of the article where you talked about, hey, the comparisons to the Yom Kippur War and what's happening now. You talked about oil prices going from 5 to 50, interest rates from 6 to 18, from gold to 42 to 875. Do you believe that's going to happen right now? Or do you buy this article's analysis that it is different and we may not see that large of a spike in commodities prices?
It is different, but yet the same. And we have a fantastic person out there. What is it? Both of these things can be true.
I love Tisha Schuler. Both things can be true.
And this is where I think we're going to play both sides of the fence here. Both sides, both things can be true. And that is, you take a look at the percentage of 5 to 50 crude. We're already at 100 at the strike price where Saudi Arabia really would like to keep it. Russia's making money hand over fist.
We're at 84 Brent, so we're not quite there yet.
But if you take a look at last week, Russia sold Russian crude to India for $20 over the sanction price. They're not supposed to sell any Russian oil over $60 a barrel. They sold it at $80. India bought it. They're buying everything they can at 80. So even at a discounted price, it's there. Interest rates. I'm sorry. They're going to look at raise the interest rates again because the Fed is looking at, Michael, are you ready? They think that the economy is still going good. And they think that 3.5% unemployment is actually too low, but you have to analyze, and I'm going to go off sidetrack for just 1 second. The jobs numbers this past week were absolutely horrific. 40% of that estimated 300,000 jobs, government. The other 40% were part-time jobs. So you start taking a look at the real high dollar, high net worth, those were 10,000 jobs. So the real job number, federal government does not create any value or jobs to the market. They are a job sucking black hole out of the life of Americans. So Think about those job markets. Think about the Fed thinking that they're going to increase inflation. Will it get to the 18%? I don't know. Will it get to higher than it is? Yeah, I think you're going to see 2 more Fed raises.
I think you're going to have to, because I think you are going to see a commodity price, especially when we see natural gas at $3.33. We're going to see, I think, a commodities boom. So great coverage. Energy Newsbeat's going to have everything breaking down what's going on with this war, with this terrorist attack in Israel from an energy side. Stu's going to keep us up to speed on it. We appreciate it. I think the next thing, we got to just talk Exxon here. So, I mean, as we listen to this on Monday, obviously you've heard the rumors, and as you listen to this, we're recording this on Sunday. So if the rumors actually become true, we'll try to throw in a new segment. But at the time of recording this, it's just rumors right now. The rumor is
right.
ExxonMobil is looking and on the verge of purchasing Pioneer Natural Resources for an estimated $60 billion. Pioneer is an exclusive Permian operator and was one of the first companies to really take the Permian horizontal in terms of large-scale developmental. Scott Sheffield, the longtime CEO there since 1997, after their combination, after the combination with Parker and Parsley, he takes over as CEO, set to retire at the end of this year and turn over operations to COO Richard Dealey. But I don't think that's going to happen, Stu. I think this is a deal that I think when you look back there, multiple people in the past 6 months have said this is probably going to happen. Exxon is going to go buy somebody. They're going to buy,
right.
They're going to buy Pioneer. They're going to buy EOG. They're going to buy Oxy. They're going to buy somebody. And, yes, buying, someone for $5 or $10 billion does good, but we knew that in this new age of M&A and consolidation, we knew something like this was going to happen. And I think the real question and the real analysis point from this is exactly, and Stu brings a great article here, Exxon investors ready to embrace buying existing oil over new drilling. This is a topic I love because this comes back to the idea of, well, if ExxonMobil has the ability and has all of these premium locations that they could drill, why do they need to buy Pioneer, basically the number 2 Permian player, for $60 billion? Is that because their Pioneer's locations are better? Interesting. So now what you're seeing is this is always what people say. Don't listen to the words that I say. Listen to my actions.
Right.
Everyone
listen
keeps
to my
telling
actions.
us they have all these crazy locations and thousands of double premium locations. We got to get some merch that says that. And everybody's got these accretive locations. Yet what are people actually doing? Exxon says we're just going to have to go buy. We're going to have to go buy that 700,000 BOE a day for $60 billion. We just got to go buy it. What is right? We can't. Why would we drill when we can go acquire? And I think that absolutely has been proven true. We've seen the rig count drop tremendously. I mean, I don't have the rig count. Let me pull up the rig count here. But because that dropped on Friday.
The business models that you and I have talked about.
4.
It's what?
Oil prices have been up. Year over year, oil prices are up about 50%, and the rig count has dropped by 143. It's watch what I do, not do what I say.
Right. Michael, the best investment deals you and I have been working on, and when oil companies ask us to evaluate deals, and we take a look at this, some of the best deals for investors end up with a split between drilling new wells and buying PDP. And when you take a look at that, that's exactly what the big boys are doing.
Well, it's a little, I would say it's a little bit more nuanced with that. Every company has a few good locations. The problem is everyone claims they have 1,000 good locations, and that's a scam. So what you're seeing is Exxon may have some good locations, but in their macro analysis, they want to grow. They have a target in growth. They see that target for growth is easier and quicker by using M&A to just acquire that missing BOE per day instead of going out and drilling it. So what does that tell you? The risk off play is acquisition. So for me, what this says going forward is you're going to see a lot more of this. Chevron is squarely on the clock right now, and they've got EOG, Oxy, Diamondback. There's a few others out there that are in my opinion, I'm sure hard at work talking to the ConocoPhillips, the Chevrons, and probably the Shells of this world to say, what next?
Right. And I think you're going to see more and more of it.
So who do you think, I mean, I have my opinions, but who do you think is the next company? Give your prediction right now, because everyone's going to be throwing out the predictions. Let's get us on the record. Who do you think the next M&A combo is?
Well, that's a big open-ended question. They're almost all in play. And the reason for that is you're going to take a look at, does a company like Exxon or BP or anybody else actually want to come in and say, I want into the Balkan? Do I want to get into the Eagle Ford? Eagle Ford's on the way down in M&A activity. So I think that it's going to be, you take a look at, Continental's coming back, and it went back private. You take a look at, is it a Haynesville play? Or is it a Marcellus play? It's going to be play driven, I believe.
No, you're absolutely right. You're absolutely right. And that's why I think there's one company that I think I'm going to take off the table. I don't think Oxy's going to sell.
Nope.
I think they could sell their Colorado assets, but I don't think Warren Buffett is necessarily looking to cash out per se. And I think he's going to be very picky and probably doesn't want to own Chevron stock, because I think that's the other end of the deal with this Exxon Pioneer. We don't know whether it's going to be we don't know what the final value is going to be. I mean, 60 billion on a market cap of 50 billion for Pioneer seems a little light. Seems to be that they got to get a, 65, 70. I don't know what their corporate models look like. We'll have to plug the numbers in, but seems to be that's a little light for Pioneer. So the question will be, is that a mix of cash, stock, or currently as of 2020, their last quarterly report in 2023, they got about 30 billion cash on hand. So they're going to finance the rest to pay all in cash, or are they going to finance that with a mix of stock? And I think that will tell me what happens with Oxy. Because remember, Warren Buffett is still the largest shareholder in Oxy and has a lot of control and a lot of say. And I wouldn't say control, I would say a lot of gusto to be able to say, hey, no, if we're going to sell, I want all cash. And if he wants an all cash offer, I doubt anybody but Exxon's going to be able to do that. And Exxon just took themselves off the table by acquiring Pioneer. So I think unless Warren Buffett is looking to take Chevron stock, and I think Chevron or BP are probably the only two companies that could buy Oxy, unless he wants to do that, which I don't think he does, because he could do that right now. He could do that if he wanted to, but he's not. Why? Because I think he wants the large independent. I don't think he wants the large integrated company, because I think he sees that they're not as tied to the commodity price, which, again, he's playing a commodities boom here, clearly, and he's playing off the macro theory of energy is going to become more scarce, which means those things are going to become more valuable. So I don't know what the next is. I think EOG is probably the next one off the table. Chevron, EOG makes sense. The problem is EOG is a little bit spread out. They have their core Permian operations. I think you're right, Stu. The plays are going to be extremely helpful, but I'm taking Oxy off the table. I think they're going to stand tight and not. And if anything, they're going to try to swoop up some of the smaller guys in order to prop themselves up. And maybe 2 years from now, they look to sell. But I think Warren Buffett's holding out right now.
I would agree, but let me throw this prediction out there. I think that Oxy has teed itself up for carbon capture. And I think that it has done an outstanding job getting into that multi-trillion-dollar market. Yes. We've seen the quote-unquote supposed death of ESG investing. I called for a great awakening in that last year. I think that within the next 2 years, you're going to see the lack of funding being able to go into carbon capture. Oxy is teed up right now for success as long as the gravy train for funding keeps going, because you're going to see the market now coming around, and they're saying, is the regulatory issue going to start coming in and saying, are the mandates going to be on declaring your carbon output? Well, then you got to buy carbon credits, or you got to do carbon capture. Carbon capture is a market that is solid today. I think that if it goes in a certain way, carbon capture market is going to fall the way of wind. How many years from now? I'm not sure. but wind is becoming unsustainable. And I think carbon capture market is going to be unsustainable. So Warren Buffett, I think, is on track now with Oxy. I think Oxy for the long term is not a good play. Make sense?
No, I agree. I think again, it's crazy. So I think not that this is we will obviously if we will probably, once this actually happens, we'll probably have to do a separate almost breaking news podcast to probably break down all of the details in there. We may have to do a little deal valuation. I think it'll be interesting to see what the value comes down, but there's so much that goes into this valuation. I mean, Pioneer is stripping lithium out of their water and reselling that lithium on the open market. So there's a lot more that goes into it than just some PDP and some PUDs. So very interesting to break this all down.
Oil prices and energy stocks surge after attack on Israel. Here's what comes next. This is a pretty nice little article kind of following up from yesterday. Right out of the article, U.S. listed energy stocks were set for a positive open. Among them were ExxonMobil, up 3.9 in trading. Chevron was up 3. ConocoPhillips was gained 4.4. Occidental was up 4.2. And Michael, a lot of the investment houses around the U.S. were saying even Halliburton was up 6.1. Formerly Schlumberger.
We're keeping that in the show. That's unbelievable. Schlumberger for all you folks listening. Whew.
I am such a dope. 4.3. That is Oklahoma State graduate, by the way.
Yes, I was going to say.
Okay. These events are really, here's where I want to just kind of give it a shout out to our show yesterday. Michael, yesterday on the show, we said that it was a 300% increase back on the first Israeli Yom Kippur war, $5 to $50. Right now, we don't see it going that way because it's a different market. Several different things are going on, unless because of the Secretary Yellen out there saying about the Russian crude going out. The Iranians' sanctions don't work either. If Israel goes out and takes out the Iranian oil wells, you will see a huge spike. And there's two reasons for this.
Yeah, I'll also be getting drafted if that happens. So let's hope that doesn't happen.
Oh, it doesn't. But on the here's why. There are two stories going out there as to why Iran allegedly, for our podcast listeners, I'm holding up the quotations, allegedly, is not funding Hamas by the $6 billion that the Biden administration put in. I heard great things that it was not great things that they did it, but the amount of oil that they've been selling to China, just like Russia, at that $80 mark above sanctions and outside of OPEC plus production quotas, has, they think, $70 billion has been the revenue stream. So $70 billion funded the attack on a good portion of it instead of the $6 billion. Loved all that analysis. Here's where I think it's going to really go on up. Does all that make sense, Michael?
No, it makes sense. I thought you find it interesting in the midst of an oil price shock. The stocks that are up more so are Marathon and Oxy and Conoco, which are more pure play E&P operators. Than you see Exxon and Chevron only up 3.9 and 3 percentage points. So you can see where the difference comes in. I think the article that you have next, investors look to oil prices, Israel/Hamas conflict, quote, unnerving global markets, points out that obviously oil prices are going to continue to rise. But I think what's going to exacerbate the commodities boom issue is the fact that interest rates are about to spike. I mean, we've seen the odds for interest rates here at home to increase have basically doubled since this, or not doubled. I think it's about have increased about 25% in the next Fed meeting after these results. So I personally, Stu, think that's going to be the biggest hit when it comes to Wall Street, is the fact that now interest rates are going to continue to stay high in this commodity style boom in order to help hopefully curb inflation.
Major headwinds threaten offshore wind targets. We've been seeing, Michael, you and I have been talking about some of the real problems going on, but I think this is really hopping into some big numbers here. And the last 5 years, the top 4 listed turbine producers outside China have lost $7 billion in over $5 billion alone. That's a lot of billions, even by my standards.
What does he say? Last year, the chief executive of that same turbine maker, Vestas, says that the company lost 8% on every turbine sold.
And that's with tax incentives. So,
oh, really?
Do what?
Oh, really? That's with tax incentives.
That's with
or subsidies.
That's post-tax. Yes, subsidies. So, here's where it gets in here and says warranty issues drive turbine losses. These things were not made to be indestructible. They're not made to last 30 years. You and I have talked about my crayon numbers from Oklahoma State University. I mean, my crayon broke 4 or 5 times, and it is pathetic that they are fiscally unreliable from day one. So, okay, Siemens is now finding some serious problems. Here's a quote from Dr. Wei Zhang. He's a senior risk consultant at Natural Resources Construction. This is an offshore outfit. We are quite used to wind turbines with 8 megawatts, 9 megawatts, but we're seeing newer models reach 14 megawatts or 18 megawatts. A project in Australia even planning on using 20 megawatts. Inevitably, the size creates a corresponding increase in risk and more whales, Michael, that they can kill. Although wind turbines are engineered, pick them up, engineered to work within certain conditions, there's a lack of real world data on both performance and long-term impacts on these larger turbines and their associated infrastructure. Okay, I'm going to go down to Rob West. I want to read this quote. Physics inherently punishes larger turbines. Larger blades will inherently deflect more, which means they need stiffer spar caps, shear webs, and more expensive materials. They will also weigh more, which pushes more stress and strain through the blade root and nacelle during each rotation. Rob West. Thunder said energy. Michael, if our producer will roll this in, wind turbine growth, power output, maximum rotor diameter. This almost reminds me of, for our podcast listener, it starts in 1995 with a little tiny little windmill, and then it goes to 2023 and it's like huge. This almost reminds me of the evolution chart. You see the monkey in the left-hand side and he's walking along and it keeps growing bigger. This is showing size. You hear this a lot, Michael. I know you do. Size matters, right? I know you hear this.
I don't hear it as much as I would like to.
I'm not hearing it about your height.
Yes. Okay. Definitely not hearing it as much as I would like. I do find it interesting though, Stu. Darn physics, man. Physics is against ESG. I think that's what I learned out of this. Physics is anti-climate.
Oh, it is. And it is unbelievable. Fraser McLean, CEO of G-Cube Insurance. This is the other key point in here. The push to rapidly develop more powerful machines is piling pressure on manufacturers, the supply chain, and insurance market. Scaling up is creating a growth financial risk that pose a fundamental threat to the sector. He's dead on right. And Michael, a few days ago, we talked about on this very podcast, if you can remember, and I know, hang on, this is a moment of silence for your memory. Okay, thank you. And that is that we talked about the EVs. The EVs, Michael, the insurance companies, when we talked in the UK, was one guy went from £1,000 of insurance cost to £5,000. Insurance is going to break the ESG mode. I guarantee you, it's the insurance guys, and they know the numbers.
Yeah, and they'll charge you for it.
The next one coming around the corner is Israel-Hamas conflict directly impacts oil and gas prices. I just talked to David Blackman about an hour ago, and as we were talking about it, he did agree that if there's two really big unknowns out there, if Israel gets upset that the Hamas money to do the strikes in did come from Iran. Iran has gotten, I've heard everything from $30 billion to $70 billion that they have shipped in income in oil going out to China, India, and I'm tracking down oil to the United States, and I'm trying to make sure I say that correctly, so I don't want to give any misinformation. So people are buying oil from Iran. That has funded a lot of money, and people have been saying all over the place that Iran is a big supporter of Hamas. So if Israel tries to take out the export facilities in Iran, that will really make it tougher for Iran, as well. For India and China. And then there was also an article that just came out that Russia had sold oil to India at $80, which was above the cap, the EU sanction cap of $60. So when you take a look at all that, that one thing could impact heavily the price of oil. I want to go into some natural gas here in a second. But if Iran mines the Strait of Hormuz, that is a huge channel for tankers around the world. That could be another one. In this article that we were talking about, Israel has suspended operations at the offshore Tamar gas field and security precautions and is investigating alternative fuel sources. This is huge. It will also impact Israel's trading partners, including Egypt, who imports Israel's gas, has been cut by 20%. That's a lot of gas for Egypt. Although not directly targeted by Hamas, Israel's commercial ports have also been impacted by the surprise offensive. We continue to supply our customers, the spokesperson said. Chevron also, though, is focused on the safe and reliable supply of natural gas in the Leviathan field. The Leviathan field is huge and critical for the LNG natural gas into Europe as well, too. It's one of the world's largest deep water gas reserves, and 200 engineers designed with 7,000 workers from 25 different countries built out the Leviathan field. We're going to be watching this, and that is a huge one. Taking out gas production in the Leviathan field would be the other third cornerstone, that if Iran got in and really tried to impact this whole area could be impacted. A third order of magnitude would be the importance of the U.S. oil and gas shale plays coming online. So all of that is directly impacted on each other.